Colgate-Palmolive manufactures and sells oral and personal care consumer products worldwide. Company's stock price has been under pressure. In the past year, it declined almost 18%. So let's dig into the business to find out what's going on. I will answer 4 critical questions in this video. How profitable is the business? How company distributes the earnings? What are the business's future prospects? How attractive is the current price of the business? As I mentioned, Colgate-Palmolive is a widely known business, which has been operating for more than a century. It divides its operations into 4 categories: oral care, personal care, home care, and pet nutrition. Oral care accounts for nearly half of the company's revenue, currently sitting at 44%. Other 3 categories divide the rest. Total revenue for the trailing 12 months has been slightly over $20 billion. Revenue did not grow in the past year, but over the 10-year period, annual growth rate has been 1.4% without any noticeable fluctuations. Net income for the trailing 12 months was $2.9 billion. We can see that during a period between 2021 and 2023, net income shrank significantly. This was influenced by asset write-down, impairment of goodwill, and legal settlements. It does look bad on paper, but except for legal settlements, no cash left the business. And later on, we can see that the net income rebounded. Company's profit margin is fluctuating around 15%. Free cash flow for the trailing 12 months was $3.4 billion. It did have a dip in 2021-2022 period, same as net income, but for different reasons. Free cash flow was influenced by changes in working capital. Anyway, the current margin is at 17%, which looking at the past 10 years does not seem unusual. To answer our question, how profitable the business is, I can say that the business revenue is stable and expanding slowly. Company is profitable and generates positive and somewhat consistent free cash flow that can be distributed to shareholders' benefit. And this leads us to the second question. How company distributes the earnings? Great management should allocate free cash flow to generate the highest return to the shareholders of the business. Let's take a look at how the management did in the past year and beyond. First of all, let's look at the return on capital invested, or ROIC, which measures efficiency of capital employment. Currently, ROIC sits at 36%, which is very high. And if we look at values from 3, 5, and 10 years ago, they are all above 30%, so the current number seems believable. To achieve this high return on capital, company had to spend 14% or around $570 million of operating cash flow this year. To put this into the context, that $570 million reinvested into the business should generate $206 million of after-tax operating profit next year. And after the capital expenditures, we are left with free cash flow of $3.4 billion. Slightly more than half of that was paid out as dividends this year. 36% was allocated for repurchase of shares. Debt wasn't repaid, so the company retained about 18% of free cash flow. Company pays around 2.5% interest on its debt, but could earn 3.6% on short-term USA Treasury bills, so repaying the debt doesn't look that attractive. But take a look at this number, which is the ratio between business debt and its equity, 680%. Colgate-Palmolive could quite easily repay that debt, which totals for $8.4 billion. But since debt is so cheap for them and their cash flow is stable and predictable, management purposefully chooses not to repay the debt and rather buy back the shares to increase the existing shareholders' ownership. Lastly, company did not make any acquisitions in the most recent quarter, but a quarter before this, it did. Colgate-Palmolive spent $301 million, of which $293 was cash, to acquire an Australian company. I quote, to provide company's Hill's Pet Nutrition segment with an entry into the fast-growing fresh pet food category in Australia. So to sum up what I have just talked about and answer the question on how company distributes its earnings, I can conclude that it distributes significant amount of free cash flow to shareholders and manages to sustain very high business efficiency by investing relatively low amounts back into the operations. Let's move on to the future prospects. If we go back to the revenue graph for a minute, I'd say we can expect low single-digit revenue growth in the future. In the first 9 months of this fiscal year, company has been struggling with volume a bit, but compensated it with increased pricing. Colgate-Palmolive thinks that it holds 41% global share in toothpaste market and 32% global share in toothbrush market. It does not provide global share numbers for other categories. Colgate-Palmolive managed to sustain gross margin of 58 to 60% over the 10-year period. The seemingly small fluctuation of 2% currently does result in $400 million of earnings. Operating profit margin is around 22% at the moment. However, 5 years ago it was over 24%, so operational efficiency suffered in the past 5 years. Again, those few percentage points could earn the company a couple hundred million per year. To sum up, Colgate-Palmolive has a strong brand and a stable revenue stream. We shouldn't expect moonshots, but even a few percentage points here and there have a substantial impact on the bottom line. What we can expect is stability and generous shareholder returns in the form of dividends and share repurchases. And from here, we're moving to the last question. How attractive is the current price of the business? Based on my estimations, stock price value is somewhere between $70 and $80 per share, pretty close to what it costs now. We have seen the price declining since 2024, when it reached a peak of 110. I don't see anything particularly bad that happened to the business to make me be afraid of the downward trend. In my opinion, Colgate-Palmolive was overvalued, and now the price returned to its value range. From here, I give a stock a neutral rating, but anything close to 70 in my opinion is a buy. If you have something to add, I would like to see your thoughts in the comment section below. Thank you for watching. If you found this analysis useful and if you're looking for more investment ideas, subscribe to my channel. I'm Arimas and these were my insights. Stay curious, stay disciplined, and may your returns be strong.